Hello, my name is Marty Foreman. I'm a state specialist with the University of Missouri Extension, Ag Business and Policy. In this video, I want to review the USDA November 10 crop production and supply demand update. USDA put out some pretty interesting numbers for corn and soybeans in this month's update. So let's start with the corn. This is the slide on the U.S. and Missouri corn yields. The black line is the U.S. Yield. I know USDA revised the corn yield down 2.6 bushels per acre from last month's estimate down to 175.8 for the national average. This is just now slightly below the previous record yields for corn, and it's down significantly from where USDA was, back earlier in the summer. At that point, it looked like, corn yields could possibly exceed 180 bushels an acre. And it looks like the late season dryness had some negative impact on yields. So I think largely on the ear weights. So yields a combination of ear weights and ear counts. And ear counts were steady this month. So the reduction in yield is tied up with the a little lower ear weight. And I think that late season dryness that we had across a pretty good portion of the Midwest had a little bit of a negative impact on ear weights. For Missouri's yield, they trimmed Missouri's yield by a couple bushels, cutting it back to 167 bushels per acre. If we go to the supply demand table, you can see there's the 175.8 this month. That 175.8 is also a couple bushels below where the trade was expecting. That resulted in a production total of 14.5 billion bushels, down 215 million from the previous month. If you go on down to the second bottom half of the table there, feed and residual, they lowered feed and residual by 75 million bushels, largely just based on smaller crop size there. The big item, though, on the demand side is that line with exports. You see the 2.650 export forecast now. That's up 325 million bushels from last month. That's a big change. That 2.650 export forecast, if realized, that would be a new record for corn exports for the marketing year. Prior high water mark in exports is a little over 2.4 billion bushels. So this would exceed that by a little over 200 million on prior record. And that is a big change from last month. So the combination of the lower production and increased use resulted in a pretty significant cut in the ending stocks forecast for corn. You can see the ending stocks now 1.7 billion. That's down 465 million from last month, and takes the stocks to use down to 11.5%, which is kind of approaching a level threshold there, about 10%, which is starts to look a little bit tight on the supply demand balance for corn. Also, the USDA revised the corn yield, or I'm sorry, the price forecast up 40 cents a bushel from last month, up to $4 per bushel. So some pretty significant changes on the supply demand table for corn. This is a graph just showing the combination of stocks to use, which is the blue bars there, and the red line, which is the season average price received by farmers. That's on the supply demand table I just showed you. So you can see historically, you have high stocks and tend to have low prices. And we've seen stocks tighten a little bit here the last couple of years, and then this revision this month's pretty significant. If you recall, earlier this summer, USDA projecting that ending stocks number to be up over 3 billion bushels. So we've cut that back by almost half from what we were looking at earlier this summer. So with the tighter stocks, you've got the season average price now up there at the $4 mark. So a pretty significant change and a lot more positive outlook, I think, for this corn supply demand. This is a weekly nearby corn futures chart. So this would be plotting the December corn futures contract on the right there. And you can see we've pushed out well above $4 and up to toward 4.25. That's the highest we've been since back in the summer of 2019. That high back there in the summer, a little below 480 is would sort of be the next, I guess, key resistance level on this chart. I'm not sure we'll get there without some additional, new fundamentals, but this has been a pretty impressive rally in corn. You can see back in the late summer there, we had prices, close to 320. So we've tacked on about $1 a bushel on the corn price in the futures market here just since late August. Shifting to the soybean market, you can see the soybean yield. USDA also cut soybean yields a little bit. The national average now is 50.7 bushels per acre. That's down 1.2 from last month. So some significant cuts there as well. Still a little bit closer to the record high on yields. So some of that late summer dryness had a little bit of an impact on soybeans. It doesn't look like it was quite as significant as with the corn. The yield though did come in about a bushel per acre below where the trade was expecting. So trade saw that as a positive sign on the based on the yield, the lower yield estimate. For Missouri, USDA cut the soybean yield from Missouri by 1 bushel per acre down to 49 bushels. On the supply-demand balance, you can see the lower yield down 1.2 from last month to 50.7. Cut the production estimate on soybeans by nearly 100 million bushels down to 4.17 billion. No other changes there. Pretty much fell through total supply down 97 million. On the demand side, you can see the revisions there. Not much change on the demand forecast, even with the smaller production. So the lower production number pretty much fell through to the ending stocks down to 190 million bushels, down 100 million from last month. And then that takes the stocks to use down to 4.2%. That is starting to really tighten up on the supply and demand balance for soybeans. You can see here also they revised the the season average price of 60 cents a bushel to $10.40. If we look at a similar graph on the stocks to use versus price, the blue bars of the stocks to use down there at 4.2%. That's the lowest, since we were back in, that's 2014 or so. So this is the second tightest, at least projection for ending stocks, back 30 years, back to 1990-91. So things are really tightening up quite a bit on the soybean balance sheet, and really starts to put the soybean supply-demand balance in a situation where if we have any, some sort of a crop issue in South America, it starts to tighten things up, and you might need to see prices push higher just to begin to slow consumption. If you look at the price chart here on soybeans, you can see, we're up to the highest level we've been in soybeans since back in 2016. That next high up there just below $12 would be the next technical resistance point for soybeans. So we've really seen a real significant change in the supply-demand balance in beans over the last few months. So a lot will depend on what happens in South America and their growing season here over the next couple of months as to whether prices can push on up toward that high or not. USDA did revise Argentina's soybean production down 2.5 million tons this month. So some issues there, mostly tied to the economic situation in Argentina. So that does it for this month's update. Thank you for watching.